Hello everyone, this is Professor MoneyPigTrading. November 17, 2021, we're going to talk about a shipping stock ZIM that we talked about before. The last video will be in the upper right corner. Basically, this report amazing monster 20 Q3 earnings and possibly going to be a 40% dividend. So let's take a look. So if you're interested in our Discord community, make sure to check it out, www.moneypigtrading.com. Twitter, YouTube, Instagram, or MoneyPigTrading. Make sure feel free to follow and make sure to like this video so other investor friends who are interested in ZIM, they can find the video that they are looking for. So really quick disclaimer, we're not financial advisors, so please invest at your own risk, and we currently are holding ZIM stocks and long call options. So ZIM actually just reported an awesome earning. The EPS is actually $12 a share. It's actually way higher than our $9 a share expectation, and Wall Street average consensus is $9.2 per share. So it's about 30% higher than expected. The revenues was a great beat, $3.14 billion, larger than $2.74 billion expected. They also raised the guidance. The guidance is 29% higher than expected as well. So beat on every each three fronts. So pretty amazing. So we actually summarize the most impressive earnings among the shipping industry, and you can see the left side of category. We have container, dry bulk, and leaser and tanker. We actually introduce what are the differences in another video. The video will be in the upper right corner. And basically, ZIM actually reported the best EPS and revenues throughout all of them. You can see the EPS is actually almost 100% of the second best, Matson, MATX. And its revenue, ZIM, is actually almost about 3 times higher than Matson. The one reasons we mentioned before, ZIM's business model, is they actually don't have a lot of ships on their balance sheet. They rent all the ship. So right now, because the container shipping cost is so high and the leasing cost is not increasing as quickly as in the container shipping rate, and that's why ZIM can become a cash generating machine, and that's why I can report such amazing revenues. So yeah, just a really quick high level how amazing ZIM is, the earning is. Not only is amazing for itself, but also in the whole industry. And the next slide is actually getting from the ZIM earning report. So the first thing you have to look at, this is the adjusted EBITDA in $1 million. You can see the growth every single quarter is like an exponential growth. This quarter EBITDA is actually about 70% higher than last quarter, which last quarter was already very amazing. The other key point for this chart to look at is a green line over here. It says 5.3. That's the net leverage ratio. In this earning call, their CEO probably mentioned that currently their net leverage ratio is come back down to 0 from 5.3x back to Q1 2019. And that means currently they don't have any debts. They don't have any leverage. Now, every single quarter, they're just going to generate a ton of cash, and they're going to return a lot of those cash to shareholders. And the other way to look at it is what we put on summary on these two charts. The left says that the net income in $1 million. The chart on the left is in years, 2018 all the way to 2021. The net income by quarter is on the right side, just for 2021. The left side, let's take a look. Basically, 2018 and 19, they're still losing money, negative net income. 2020, they make about $400 million. 2021 so far, this number hasn't included for Q4 yet. Just the 3 quarters so far this year. It's an amazing $2.9 billion. So that's about 7 times growth from last year. Not including Q4 itself. Looking at the right side by quarter, you can see the quarter growth is also very amazing. Where right now conservatively just expect maybe next quarter they will report slightly better inside of this exponential growth, like compared to Q3 and Q2, where the growth is almost at 90%. I don't think Q4 will see a 90% growth, but you never know. ZIM just continue to amaze us. So based on all this number putting together, the next important information is they actually have a new dividend policy. In the very first ZIM video that we mentioned, their policy is they're going to distribute the annual dividends of 30 to 50% of annual net income to shareholders, maybe sometime February, March, April next year, based on the 2021 net income. But now in the earning call, their CEO said now they want to attract more long-term investors into the stock. So their new policy is like what the typical dividend distributed company will do in the United States market is they distribute quarterly dividends, and the policy is 20% of the quarter net income. And on top of that, every fourth quarter, they will provide the annual net income 30 to 50% as a fourth quarter dividend. So by saying that, based on this policy, based on the current net profit that reported in this earning, the Q3 earnings, the Q3 quarterly dividend will be $2.5 a share. If we count it based on the $50 per share, that's still really decent, 4% just by the Q3 dividend itself. And this dividend will be distributed, payable in December 2021. We don't know the date yet, but they have an annual meeting sometime in December, I think early December. They'll probably announce the payable date in that annual shareholder meeting. And they haven't announced the date yet, but basically the Q4 dividends will be payable expected April 2022. So how much money are we talking about? How much dividends? So we do some math. Hypothetically, we put the net income 2021, including Q4, let's say is a break even, just like Q3, they're going to generate $4.4 billion of net income. Let's say the most optimistic way, 50% of the net income become dividends, divided by 2, that's $2.2 billion. Currently, there are 118 million shares, outstanding shares in the market. You do this math together, you get this rolled over here. That means that's 50% of the net income of 2021 net income. That'll be $18.57 of dividends per share, and that'll be distributed potentially in April. And I know the range is 30%, so if we calculate by 30% of the 2021 net income, again, the Q4 net income is assumed the same as Q3, which should be higher than Q3. Based on this math, the 30% of the net income in 2021, that will be $11.14. That will still make, plus the $2.50 in the Q3 earnings that when they mentioned, that will make the dividend ranging from 26% to 40% if you got in ZIM at 52.4, which is the closing price today as of November 17, 2021. That's a really massive level of dividends. Usually you see this kind of dividend, that company will have or is having some financial difficulties, even have a lot of debts, don't have a lot of cash, probably going to bankrupt. You can see a ton of those kind of stocks, especially on the real estate REITs during this pandemic. A lot of them almost went bankruptcy, right? And you see those dividends become abnormally high. When you see such a healthy company with a cash generation machine, you probably at most see the dividend as 6 to 7%. You see a lot of REITs like that actually, like LADR, BXMT, Blackstone, a series of stocks. A lot of them are around 6-7%. So if you are calculating based on 6 or 7%, you should value ZIM as around $90 to $100 based on this dividend amount, or even higher, right? So that's one of the reasons we think ZIM right now is so undervalued based on the dividend profile in the next coming months. The next thing I really like about this earning report is that you probably noticed the news if you watch ZIM, is actually purchased in October. They purchased 8 vessels. We mentioned the asset-light company don't really have a lot of ships on their balance sheet, and now finally they purchased 8 ships since the ship rental cost is actually moving higher. So by having some ships, they will have more capacity. In the meantime, in the long run, that will help the company and the shareholders. The other thing I really like they highlight is they currently are renting or owning 25 green energy based vessels using liquefied natural gas. So because there are some shipping policy coming on 2023, 2024 down the road, if your ships are still burning gas like oil, crude oil, then basically you will have to slow down your ships or lower the capacity. So that will limit your revenues basically. So they actually think ahead of it, and now they have a ton of cash. They're actually addressing this issue in advance. So I really like the fact that the management's doing their job, thinking forward, and taking care of the shareholders and make sure they continue to generate so much revenues down the road, and make sure they are not affected by those green energy policy in the mid 2020s. The other thing they mentioned, a lot of people have concern, analysts also have asked questions. Those are the 4 most important points I just want to highlight here, and this is what their CEO discussed with the analysts. The first thing is, a lot of analysts express concern like, will this elevated shipping costs still remain there? And their CEO says yes, because the shipping congestion is actually the worst right now. Right now, if you look at the Long Beach port, right now there are 80 cargo ships waiting outside. That's the longest queue right now ever in the history. And they think the elevated freight price will continue to last at least for another 6 months because there's just so many problems, right? Infrastructure of the U.S. ports, we don't have enough truck drivers, etc. So they think the higher shipping costs will be there. The other question the Jeffrey analyst actually asks is about like, how about the Trans-Pacific contract? So the CEO actually says the contract renews every April. So even the shipping costs start to drop after Chinese New Year in February, it's not going to affect ZIM's profit margin profile in the Q4 this year and Q1 next year, because most Trans-Pacific contracts are signed until and renew every April. And the next thing is, a lot of customers are right now the shipping cost is so high. Like, does ZIM have any decision to make long-term contract with clients, like 12 plus months of contract, secure higher shipping costs, and secure the long-term revenue and growth trajectory for ZIM? The answer is no. Their management is thinking about it, but they haven't committed anything. Then if there's any update, they said they will update it in the next earnings call. The other question is, the share repurchase is on the table or not? They said it's definitely on the table. Right now, the policy is contribute dividends to attract long-term investors instead of using one-time share repurchase to attract like shorter-term investor. So, which I agree is a pretty decent way. But they said if they continue, I feel it's like if they continue to generate a lot of cash, which I think they will in 2023, 2022. They will definitely perform share repurchase at one point. And not only the ZIM CEO mentioned this, but also other shipping stock companies, their CEO mentioned in their earnings report is that this elevated freight price will continue to be there. Some company CEO actually said that they believe the container shipping costs will still be very, very high, and this shipping congestion won't even be resolved until the end of 2022 or even early 2023. So if that really happened, we are going to have a really bullish year for ZIM and many other container shipping stock in 2022. So basically, looking at the daily chart, you can see right now both earnings, every time they report, is actually on the option expiration week. So the price is a little bit choppy. Today is the same, gap up and then push back down at closing. And last time report earning actually pulled down the day after. So if that happened tomorrow, don't panic. As long as it's holding the EMA support, eventually ZIM last time in 3 weeks pushed up by 60%. Okay, with such a handsome dividend coming up in a few months, solid fundamental, multiple upgrades, I really think ZIM should have a decent price action. That's at least my humble opinion. So yeah, that's pretty much it. I just want to highlight for our paid Discord community, we have decent long-term investment program, 71 trades so far this year, a return 19% per trade, and the winning rate is pretty high at 77%. So yeah, if you're interested in our paid Discord community, make sure to check out the details on www.moneypigtrading.com, which I have Thanksgiving sales coming out. Feel free to make sure to check our YouTube and Twitter and Instagram posts to get a discount code. And again, follow us on Twitter, YouTube, Instagram for the latest investment information on MoneyPigTrading. Thanks for watching. I'll see you guys in the next video. Bye-bye.